Hello Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market update for Wednesday, the 18th of July. Are we in a bull market or a bear market right now? That's the question. Depending on who you speak to, the stock market is either going to fall off a fiscal cliff or we're going to make new highs. The truth lies somewhere in between. Right now, the markets are in a very broad trading range without any clear-cut trend. Yes, I know the intermediate-term trend is positive, as we are saying today, but that trend is tempered by the bigger and longer-term trend that we follow, which indicates that the stock market remains in a bear market. And the current rally is only a counter-trend rally in a bear market. So who is right? Well, one thing I can guarantee is that the market is always right eventually. As for Market Club, we will let the markets and our trade triangles do the talking for us. We will leave all the other philosophical and economic discussions to other folks because we rely on the market itself to show us the way. So let's get started. We're at my homepage and we're looking at the homepage. You can see Adam Hewison. I use the same tools as you do. This is a very, very cool program. You can see obviously right here, takes random charts out of my portfolio and throws them here. There's obviously a very strong trend in the Canadian dollar against the Swiss franc, meaning the Canadian dollar is going up against the Swiss franc. And you can see a plus 85 score. Everything looks very, very good in this market. So let's go to my portfolio. I could go there two ways. I can go right here, or I've already created a tab which is just out of camera view, and I'll click there right now. So let's take a look at starting with the S&P 500, and I'm clicking on that, and you can see, if you remember what we talked about yesterday in this market, and that was the trend in terms of highs here, and highs here. It's sort of, we've got this, either it's about a 10 or 11-day high. So you can cut the high here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So you're right in that mode of 10 or 11 days. And it goes further back in some of the other markets, which we can show you later on. But generally speaking, we're at a high point on the Williams percent R, much like we're here and here. So I would expect we're going to see this market somewhere along the line here reverse. Maybe it's tomorrow, maybe it's next week, but I think we're up against a position where I don't think we're just going to see the market just go straight up. We've got our trade triangles monthly, which we talked about, negative, weekly, that's positive, and the daily is also positive. So, but they still give you only a 70 score, which is not enough to get a strong bull market in our opinion. So let's see how this plays out. Let's clean the screen off. Let's go to our next market. The next market we're looking at is the crude oil. Now, crude oil is just briefly touched $90 a barrel today in the August contract. You can see it's trading around 89.67. So it's over and out of the Donchian trade channel, much like it was back here on July 5th. I think we're probably going to see this market at least stabilize and maybe pull back into the fold here. You're also very overbought. So not to say it can't go higher because it's really acting very well. And it's beginning to look as though we have at least in place a mini base in terms of this is looking more and more like a base. Obviously, this level here, the 92 level, and the 90 level right here is going to be resistance. So I think that's going to probably hold the markets at least for the time being, but it looks as though we're trying to bottom out. As we said before, every time we've gotten below 80, this level here, the market's had a rally. So that's important to remember that. So let's clear the screen there and go to our next market. And this is the Dow. Now the Dow, unlike the S&P 500, is really kind of, it's, even though we have a strong day today, it still hasn't made a new high. It's not like the S&P 500. So let's just take a look at this market for the time being. So here we talked about, if we just count the days from here, this day right here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days on the high close. So this is 11 days. We go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days here. So we've got 11 days on both periods. Now, Can it go high? Yes, of course. It could be a bigger cycle that's taking place, but a couple of things to be wary of. One, we are going to find resistance right around this level here. That's right around the 12,900 level, 12,000. Let me just clear the screen and give you a better picture of what we're looking at. So we're looking at these previous highs, 12,946. I think we traded 12,960. So 12,960 rather, 12,950 is going to be some sort of resistance, in my opinion, in this market. We are overbought, so pay attention to that. Also, the euro continues to go down, even though we've broken above this PSAR. Nothing to get too excited about there. I am still negative on there. We have been for some time. Our trade triangles are still negative from 139 and 124. So I think we'll still see the target zone that we're looking for there is once again the 117 and the 120 area. So they're the target intermediate target zones, which takes us down obviously to here. So let's see how that plays out. We just came from an overbought situation, and every time we've gotten over here, the market sort of pull back a little, particularly if you look at here and here. So is this going to be a key? I think, again, if we get a close below the 122 level, which is right here, I would view that as very negative. We're on 22.65 live, and we'll see how that plays out towards perhaps the end of this week. So let's clear the screen, go to our next market. The next market we're going to be looking at is going to be the NASDAQ. Now, again, the NASDAQ is you see this pattern, and it's an interesting pattern to look at. So if we go and start counting these days, so let's just start from here. Let's start that there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 days from here to here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So possibly you could have one more day here. It's very close. So it's either going to be 10 or 11 days. And we can go back here. 1, 2, 3, 4, 5, 6, 7, 8, which is here. And we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, which is here. So it would appear from 8 to 10 days, 8 to 11 days, but probably 8 to 10 days, the market's going to make a high and then reverse. So I think that's probably what we're looking at right now. We're probably at an area we're very overbought, like here and here. So you can see we're getting close to an area that I think is going to present some problems for these markets. So let's clear the screen again. And these are just cycles, not to say, but I would say this, a longer term trend in the monthly, which is very important in the stock market, is negative. It's negative on the Dow, the NASDAQ, and the S&P 500. So that's something to really pay attention to in my book. So let's clear the screen and go to our next market. Next market, we're going to look at gold. Gold is continuing to be just disastrous in terms of really not going anywhere. We're down today. Actually, we're down 0.5%. Doesn't sound much, but it is 0.5% lower. And the key level I would look at right here is this recent low that we've seen here, and that comes in right around the 1555 level. So it's a little bit lower than we are right now, but the way things can go here in this market, it's just the lowest close. One thing that I look at, and I should recommend you look at, is sometimes throw a close-only chart in. If you look at the close-only chart, and let's put a trend line here, just across this line like this. Obviously, if we see the market go below this level, it's going to really be in. So you're looking at a close in reality. The lowest close we've seen here, let's see, 1566, 1570. I think below 1570, this is going to look really heavy. And I would not be surprised to see this market go a little lower. So again, we're getting into an oversold condition. Not to say we can't rally, but I would say certainly the emphasis right now with all of our trade triangles in a red mode, negative mode, is for the market to go lower. So let's go to our next market. Next market is copper. Copper is sort of looks like it's trying to etch out some sort of a base here. It's still too early to say that we've made a turn or we've made a base, but if you just visually look at this thing, we sort of been going that way, and that's really from about the middle of May. So it's quite some time. It's not just a little bit. So you've got maybe 8 weeks there, and you've got this really key area right here. So 3.55 over that area, I think we'll get this market on the upside if it goes over there, but it's still too early to say. I think we just have to cool our jets until we see some more activity in that market. But right now, the monthly is still negative, the weekly is positive, and the daily is positive. So you've got 2 pluses and 1 minus. So let's see how that plays out. But generally speaking, this is the more dominant cycle or the most dominant trend. So clear the screen, go to our next market. The next market we're looking at is silver. Much the same, not much to say about it. It's just dawdling along here. Certainly a close under the last low we had. That's 2650. Close below that level is not going to be good for this market. So let's see how that plays out. But it just seems like it's, we're not quite oversold. It's in the middle of nowhere. It's in no man's land right now. Also, you've got minus 85. The trend is down. So let's go to our next market. This is the CRB Reuters Jefferies Index. We obviously traded as high today as 297.91. It's very close to that levels now. It's acting in many ways very, very well. But it is at the top of the Donchian trade channel. We are overbought, so I think a little bit of caution may be necessary. But certainly today's low, we traded down to as low as 294.44 today. If we were to take that out, I think that would be a little bit suspect, as it would put the market lower for the last couple of days on a close-only basis. So really pay close attention to that one. So looking at the other markets, JP Morgan Chase, Citigroup, Bank of America came out with their earnings today, and they're down almost 2%. Not exactly thrilling. And as you know, we've been a little bit negative on the banks. And again, this is not great action in the banks by anyone's imagination. So I think given the scenario that we're looking at, I would not be surprised to see these banks go a little bit lower. Remember, we talked about Wells Fargo. This has been the best run bank right now. Still in a negative mode. We peaked outside the the Donchian trade channel. We're back in there. So I think there's a little bit of room left there. Let's take a look at Citibank. So the banks really are not in great shape right now, in my opinion. You can see we sort of, you could put a close-only chart in here. You can say, okay, we've bottomed out. We've got a great support here at 24.61 on a close-only level. And I think, 25.26 and 25, well, it looks like 24.86. So it looks like we're very close to maybe a double bottom. But again, this market has not performed. It's still not there yet. Monthly and weekly still negative, minus 65. I think we're in an overbought condition. I think we'll see this pressure coming into these markets later this week. So let's see what else we've got here. Wells Fargo. Okay, so I think we've sort of covered. We've got the directional financials, FAS and SDS. Let's take a look at these maybe tomorrow and see what happens. But the end of the week is going to be very interesting this week to see how things work out. So, hey, this is Adam Hewison, but I'm just going to remind you one thing. If you haven't given us a call for our personal one-on-one Market Club coaching, really give us a call. I think you'd really be surprised at how it can help you become a better trader. And that's our whole mission here at Market Club, is to help you improve your trading. So the call is free, 877-219-1482. It's a free consultation. You're going to get a lot of good information just by calling. There's no commitment. So you don't worry if you call, you're stuck in something. You're not going to do that. That's not how we do business at Market Club. We are here to help. Give us a call. 877-219-1482. Hey, this is Adam Hewison. Have a great trading day. I'll be back tomorrow, same time, same place. I'll see you then.